What's up, guys? So, most of you guys are here for one of two things. You guys are new to trading, don't know anything. You guys are brand new. You guys have no clue what to do, and you have never traded in your life. Or you guys have tried trading before, dabbled in it a little bit, but you guys quite aren't sure where you guys stand with it. And you want to just be able to apply whatever you learned and be able to become a sufficient independent trader. Now, I know these are the two scenarios that you guys are going through right now. And you guys may be brand new, you guys maybe have a little bit of experience with it. But overall, you guys aren't at the point where you guys know what you're doing. Both of you guys. No matter if you're on the left side or the right side of the totem pole. So in this video, I'm going to teach you guys the basics of pretty much how to work TradingView, what TradingView looks like, different parts of TradingView, and what you can expect when using this charting platform. So first off, let's go over the tools, okay? So when we look at the tools here, this is your toolbox right here. Now, when I go into small tasking, the full screen, obviously we're going to have more tools on the left hand side corner, but this is my toolbox. These are the tools that you're going to be wanting using. You're going to be wanting using the arrow, the rectangle, long position, short position, the call out, trend line, Fibonacci retracement tool, the text box, the Gann box is optional, and the path arrow. These are the ones that you want to be paying attention to, and these are the ones that you want to be using. Okay. Now, all of these will have different template plates that you can do. So for example, the trend line, when I place this, you can press the settings arrow, click on templates, save as, and you can type a name for it. And this goes for every other tool. It goes for the rectangle, click template, same thing, and so forth. And all these tools have a specific purpose. The trend line is going to mark out liquidity points. The rectangle is going to mark out PD raise, same as the Gann box. Path arrow is going to do for analysis purposes. Arrow is going to mark out liquidity points as possible as well. Callouts will mark out, going to be like software wording. Same thing for the text box. The fib tool is going to be for your standard deviations, as well as your retracement decimal point numbers. The long and short positions, these are going to be for your trade executions. And that's pretty much all the tools that you will be needing for pretty much TradingView. Okay. Now, you might be asking yourself, what am I going to be learning coming into this mentorship? Some of you guys have dabbled in retail. The people that have tried out trading just a little bit, you might have heard of the term support and resistance, or trend lines, or RSI, or Bollinger Bands, or just pretty much any retail supply and demand. You guys are hearing any of these terms? These are all retail. We will not be trading like any of that. What I will be teaching you guys is a concept. It's called ICT concepts, and this is about market algorithm. This is how the market algorithm works. Now, a lot of retail guys don't believe in market algorithms, as well as a lot of supply and demand guys as well. So what I mean by that is the market runs on an algorithm. It does the same thing every day, the same thing every week, it's the same thing every month, it does the same thing every year. Okay? It runs on this algorithm. That's its religion. This is how the market runs. And that is how I'm going to be teaching you guys how to trade by. And this is called ICT concepts or smart money concepts. Now, I'm going to teach you guys each part of the chart, okay? So, these candlesticks right here, these are called candlesticks. These bars with these little white lines, the black ones too, these are all called candlesticks. Now, just like a candlestick, there is 4 parts to it. You're going to have the bodies and the wicks, but there's 4 parts of the body and the wick, and I will show you this right here. Okay, so the bottom wick is called lower wick, or the wick of the low. Okay, so the bottom part of the wick, so this white line right here, is called the lower wick. The upper white line is called the upper wick. Okay, other known as the high. Same thing, other known as the low. Now, the body. If we have a white candle right here. Now, your guys' candles is going to be looking like green and red. The candles that are going up are going to be white for me. The candles that are going down are going to be black for me. In this, if we have an up-close candle, the candle is going up. This is called a bullish candle. If we have a black candle that's going down, this is a bearish candle, or a down-close candle. Now with the bullish candle, there is an open and there is a close. For a bullish candle, the open is always going to be the bottom of the body. For a bullish candle, the close of that candle is going to be at the top of the body. So this term is known as open, high, low, and close, okay, or OHLC. This is the term for each part of a candle. So you have the open of a bullish candle, which is at the bottom of the body. You have the close of the candle, which is at the top of the body. You have the low of the candle, which is the bottom of the wick. You have the high of the candle, which is the top of the wick. These are the 4 parts of a candlestick. An opposite would be for a bearish candle. So if we're looking at this bearish candle right here, okay, let me move everything over. Everything would just be reversed except the high and the low. Okay, so for the bullish candle, it would be open, low, high, close. For a bearish candle, instead of the open being at the bottom of the body, the open would be at the top of the body, having our open, high, low, and close, and the close being at the bottom of the body right here. Okay, and these are the 4 parts of a candlestick. Okay, just looking at this candlestick right here. Okay, we have our open at the high of the body, high of the candle at the top of the wick, low of the candle at the bottom of the wick, and low of the body at the bottom of the, or we have the close of the body at the bottom of the body. This is known as the open, high, low, close. Okay, if you're taking a look at that, we have open, high, low, close. Now, this is the basic parts of a chart. This is the candlesticks. This is what we are going to be reading. We're going to be learning how to read these candlesticks. Not with patterns, not with different types of candlestick patterns. That's retail. We use sentiment of market sentiment. We use algorithm sentiment to find out how to read these candlesticks. We don't use retail logic. We use market logic. We pay attention to the numbers, not about the psychology of other retail traders. Okay? So however, whatever you learned in retail, this is not going to be applied to anything other than the opposite of what you learned, basically. Okay? On the right side handle right here, this is the price points of the market. So right now we have the S&P 500 here. These is the price points of the S&P 500. Okay? On the bottom half of the chart right here, this is going to be your times. This is going to be your times of what time it is when that candle is formed. This 5 number right here, this represents your interval, other known as your time frame. So right now we're on the 5-minute time frame right now, which means every candle that formed is a new one is closed and then a new one is formed every 5 minutes. Every candle that forms, it takes 5 minutes to close to form a new candle. Every 5 minutes a new candle forms. And then say we go to the 1 hour time frame. Okay? Every 1 hour a new candle forms. We go to the 1 minute. Every 1 minute a new candle forms. And etc. And that is how time intervals work, other known as time frames. Okay? So what I'm going to be teaching you guys, the market that I'm going to be teaching you guys on, is going to be indice futures. So it's going to be S&P 500, NASDAQ, and somewhat of US 30. And this is the futures market of those indices. Okay? And I'm going to be teaching you guys in ICT concepts how to run these markets, how to read these markets, and how to trade these markets. And I'm going to be teaching you each type of concept, starting from basic all the way to advanced. And not only how to learn it, but how to apply it to the live markets as well. Okay? But this is the basic parts of a chart that you guys need to know. You guys need to know. Okay? Now, obviously when you have a broker connected to your trading view, okay? And a broker is basically a third-party person that allows you to put trades on into the live markets. When you have a broker, you're going to have a red button right here, which is going to be a sell market, and a blue button right here, which is going to be a buy market. With the blue button, if you press the blue button, you are going to enter into a trade, which is called a market order. If you press the sell button, you're going to enter in a trade, which is also a market order. So I know you guys are thinking, oh, trading is about, you make money when the market goes up. No, you make market when the money goes up or when the market goes down. Depends on what type of trade you put on. So if we sell the market, this is known as a short. If we sell the market right here, that means we're going to make money when the market goes down. If we buy the market right here, that means we make money when if the market does go up. Okay? And these are known as longs. When you buy the market, this is known as a long. When you short the market, when you sell the market, this is known as a short. Okay? So shorting is selling, longing is buying. Okay? Now, there are going to be 3 parts of a trade entry. So, for example, let's say we enter our trade right here. There are going to be 3 parts for a trade entry. You're going to have your entry, which is going to be this middle line here. You're going to have your stop loss, which is going to be the end of this gray box here. And you're going to have your take profit or your top profit, which is going to be the end of this black box here. To make this even more visible, we can change this to purple. Okay? Let's change this to purple, just so it looks a little bit more visual for you. Okay? So, instead of it being black, it's going to be the end of the purple box, okay? So, in this, you're going to have your entry, your stop loss, and your take profit. So, your entry, okay? Your entry can be one of 2 entries, and I would advise you to use these 2 entries only. You can do market order or a limit order. Okay? So a market order is, like I said, you press one of these 2 buttons. If we're going to be longing, we would press the blue button. When we press the blue button, you enter into the market exactly where you enter. So where the market is right now at present time, that is where you enter into the market. A limit order is you set a specific price point. So you pick a price point on the right side handle right here, and it'll line up with the candlesticks. You pick a price point, And when the market hits that price point, you get entered into the trade. When you get entered into that trade, you are entering right where you have that price point set. And if we are going to do a long limit order, your price point has to be below current market price, which would be at the moment 4788 and a half, or 0.50. So it has to be any price point below that. If it's above that, the price point will not be set as a limit order. Okay? Now, stop loss. Okay? This is basically cutting your losses early. Okay? So, when you go below your entry point, you're inside a zone. This is called drawdown. So drawdown is basically you are in the negative profit range right now. You're losing money. Now, instead of holding out your trade until it reverses all the way back up, that is pretty much gambling if you do not have a stop loss. The point of the stop loss is it will take you out of the trade, taking you out with a minimal loss compared to a major loss. So say the market trades down right now, okay? Market trades down right now, hits your stop loss, okay? Right there, boom, hits your stop loss right there. You get taken out of the trade with minus $40. So what, you know? But if you had your stop loss all the way down here, market trends down all the way down here, takes out your stop loss down there, you just lost $400. So what would you rather have, an early stop or a late stop? Or maybe even you don't even have a stop. Market keeps going down and down and down, takes out this low, continues down further, and doesn't stop. You're in an over $2,000 loss now. Which one would you rather have? Early stop loss or no stop loss, where you're continuing to lose money? This is not investing. This is day trading. Investing is a totally different thing. Okay? So this is day trading. So again, stop loss, cut your losses early basically. Entry point, you have a market order, a limit order. Market order here, limit order, you set price points. The final part of a trade entry is going to be your take profit, which is going to be, okay, taking profits out of trade. Okay, so this is basically taking your profits out of the trade already. You're exiting out of the trade. Your take profit is going to be taking out of the trade already. Whatever money you made, when you're in profit, that means you're making money. Taking your profit, you're going to be setting a price point on which, when the market hits this price point, you get tagged out of the trade and you're done. You're finished with the trading day and you're in profit for the day. That's basically what a take profit is. So the three parts of a market entry or a trading entry is going to be your entry, which is either a market or a limit order. Your stop loss, which is taking your losses early so you don't get in more drawdown. And your take profit is taking your profits out of the trade when you hit this price point. And those are the three types of a trade entry. And the opposite would be true for a short. Your stop losses would be up here. Your take profit would be down here. Simple. Okay? And these are basically each part of the trading view chart that you guys need to know and understand. Okay? Other than that, on the next episode, I'm going to be teaching you guys about risk management. And once we get over risk management, that's when we can start getting into the basic concepts. Start teaching you guys. Hope you guys have a good rest of your day.